right, welcome out to the weekend review and playbook prep for the week ending June 19th, 2026. Hope everybody had a wonderful 3-day holiday. And let's go ahead and look at a few things. This is going to be a bit of an abbreviated version from what you'll see roll out over the next month or two, as we have a lot of ideas that we want to plug into it. It's going to take a little while to implement all the different ideas that we have. We'll start out kind of looking at our market regime. For the review purposes, part of the week we were on a bearish short-term signal. Price dipped below the 20-day moving average EMA for just a little bit, and but we held firm. And the markets are looking pretty good right now as we're in a favorable condition. Trading is going well. Intermediate trend is bullish. Price is over the 30-week moving average, and short-term signal is bullish. His price is over the 20-day. We'll be adding in a bunch of our returns to kind of see what we did for the week. Looking at the chart, right? Price is looking very strong above the 30-week. I mean, we have stats on this kind of stuff, but visually you can see that price can stay above the 30-week in this manner for a bit. It'll dip down, it'll come back up, it'll dip down, it'll come back up. Our main goal, of course, is to stay bullish when price is above. That doesn't mean that we don't play any short-term defense in areas like here and here. In here, but the general feeling and idea is we want to be positioned to take advantage of the market going up. It's a strong trend. We want to be hitting the accelerator. Looking at the short-term trend really quick, here's that 1 day where we dipped below the 20-day, and this is a Fed announcement, right? This is Warsh's first meeting, and he basically vowed to get inflation down to their 2% PCE rating that they want to have. And so the thoughts there are cutting rate or hiking rates, not cutting rates, hiking rates. More restrictive policies, and that type of environment typically. At least a news headline of a change in rates you would expect the market to sell off a little bit. But I think investors and I think, big money, took a day and thought about what he said or read what he said, looked into it. And the immediate reaction was pretty good the next day. A gap up, then we got peace talks, going on. So we'll see. We'll see if we want to confirm higher. Right now, we're in what some would call a head, shoulder, so a head and shoulders pattern. This is a bearish pattern in development. If price breaks below the neckline, you would probably consider this area or the 50-day moving average an area to change sentiment. But if price can rip out of this and go up, it's actually a very bullish development, because a failed move comes a fast move often. So what we look at for patterns, these patterns happen over and over and over again in the market. Of course, each one is a little different based off the sentiment, based off things how we're going, a lot of different factors, but we're looking for things that we've seen before. This is probably your first introduction to the ERM summary. This is exposure resistance model. This is a model that we use in-house to kind of assess the overall mechanics of what's going on in the market. It's going to look at a couple different factors. We're going to be looking at trend and momentum. We're looking at breadth, which breadth has a lot to do with like how many companies or how many stocks are participating in an uptrend. We're going to look at sentiment, and then there are days where there's sort of out of normal action, right? Either a lot of action to the upside, a lot of action to the downside, and we use those signals to sometimes tell us, hey, maybe more of this is going to come into the future. Usually it's a change that we're looking for. So things were extremely bearish, and all of a sudden we get this upside sort of signal. We're looking for things like that, or if things are really bullish, we get a downside signal. We're looking for things like that. Right now, we're neutral. It's not the best rating right now, but price comes first, and these kind of things come second. So there's no need for us to freak out. But if you go back and look at the chart, we can see that we're kind of in the middle area, right? I mean, if we kind of enlarge this, right? I mean, here's a high, right? Here's a low, and we're in the middle of that, right? So this isn't saying that the market is in the middle of moving, right, strongly up. We're in the middle. We're not making new highs. We're not making new lows. We're in the middle. So I think that type of signal, is something that, it makes sense. It's sensible, right? So let's go ahead and jump over. Like I said, this is going to be an abbreviated version. Let's go ahead and jump over to Market Lens really quick. We're just going to look at a few things. I'm going to look at some of the positions that we either have in our ultra aggressive or that we have maybe we're watching very closely. So, MU has been just an amazing run. If you come all the way back here to September, it was $125, and now it's over $1,000. I don't know how many. What is that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 9.5 months. We get almost a 10-bagger, right? I mean, just looking at it, trying to do the math. I guess that's not a 10-bagger if it goes from, well, maybe pretty close. 8 or 9 times, I guess. You could do the math on that and figure it out. But that's a big, that's a pretty big move. And we've captured a bunch of this. We don't have it this whole time, but we have a bunch of this. We caught a bunch of this, and it's one of the reasons why the ultra aggressive strategy has done so well. And that's the design of the ultra aggressive. The ultra aggressive is, 30-ish% of it when we're in a favorable long environment is going to be trying to attack the leaders in the market. And this is one of the leaders. And so we have a good position in this, and we are holding, and we are in highs. If you look at this pattern, this looked very extended. We got a pullback. It found support at the 20-day, and then, ripped from 800 all the way back up to 1100. I mean, once again, doing the math, I don't know, somewhere between 30 and a 50% move from here to here. I mean, I actually think I have a tool in here that might be able to help me with that. Let's see, measure. Let's see if this does it. So if I maybe click that spot, and, oh yeah, look at that. 68% is what this is saying, at least. Run, move up. I mean, just think about that. So, I mean, could we feasibly, we came down, it looked extended, came down, found support to 20-day again, and then looks like it's like right around this area on this chart, right? So let's see. I mean, what happens if that happens again? I mean, who knows really, but we're going to be off the chart. Let's see if I hit escape, if I can. I don't know if I have that. Oh yeah, I can do it like this. Okay. So if I come in here, hit measure, I guess that's a little bit, that was probably a little bit too deep on that. So, I mean, could we get up to 1400? I mean, it's feasible. So we're holding our position in that right now. It's not extended right now. It's been a good, powerful stock. We'll see what happens. Marvell, we played it really well. Also, I got to readjust the settings on this. Let's see, how do we do this? Huh. Okay. Do we need to Oh, I need to go like this probably and then pull it up. Okay. All right. I kind of maybe we'll look at it like there you go. Okay. All right. Caught a lot of this move also. It's been another great position for us, and so looks good. I mean, there was some selling on this day, so it might need to kind of flag out a little bit more, but it's making higher lows. It's making it in a constructive fashion. So we'll see if it's, and we'll have stops in, of course. We own this one in the ultra aggressive. We have stops, and if it breaks certain levels, we'll reduce and then maybe get all the way out of it, and then see kind of how it works. But these things are they're working well. IonQ is another one. We don't own this one, but we're watching it just to kind of see if it can get some more power to it. It's been a little wild, I guess, but looks like it wants to go. I mean, it went from $32 to $72. It's a double. It's come back. It's come in more than you'd like it. Found support on the 50-day. That's a good spot to find support. And we have what we call a nice looking hammer candle here. So, we'll look to see if this thing wants to turn back up, and it might be ready to make the next leg. I'm going to see if I click this and then click back in the market lens if that resets the settings, so I don't have to go through the whole chart thing every single time. So let me come into lists, focus lists. Oh, now it's out of order from what we were just looking at. All right, IonQ. Yeah. So here we go. So we're watching it. We don't own it. We're just watching it. Let's go over here. Oh, I see what happened here. Let's go. Just change these percentage orders. Flex, another one on our watch list. Another huge move, right? So if you are catching sort of a pattern here, we like to see stocks that have made huge moves and then are cutting back and consolidating and then looking to see if they're going to turn up and continue to make that move higher. But Flex, looking like it's making that consolidation. It made a high, made a low, made a lower high, made a lower high, low, higher low, right? So it's contracting, it's starting to settle down, and we'll look for it to kind of rip higher. Hood, I just added this one today. We played a lot. This was a very playable run coming off of the lows right here out of the tariff situation, and that's a huge move from $31 to $150, right? So we're looking to see is this gonna be ready to make another run like that again? It definitely drew down. I mean, that's going from 130 to or 150. I don't know why that's right above it. Here we go. Let's see right here. 153 high to $65. We don't really want to hold that kind of drop. So, but it based. Looks like it's making higher low, higher low, higher low. Now it's starting to kind of accelerate. Here's the 200 days, so we're back over the 200 days. See, maybe if it kind of goes sideways a little bit and then wants to rip higher, might be something that we add to the portfolio. This is a solar name. This is FSLR. It's been interesting to see what solar's done, but solar had a nice move out of those lows, $120 to 284, so it's a double. Now big sweeping consolidation, drawdown, I guess, back up. We'll see. It looks wild. This is one that's probably in last place, on our list of stocks to possibly be watching. CrowdStrike, we have a nice position in this in the ultra aggressive. It's consolidating. It could possibly be something that's added to if it whips on out of here and wants to continue. I mean, this is such a strong run right here. I mean, how many I don't even know how to count this, how many days this is. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 days into new relative highs out of like maybe 20 days, right? And even the bad days were, right at the edge, right, of the top. So we're looking to see if CrowdStrike wants to continue higher. We have a nice position in it. We'll look to maybe even add if it pops out of this little range. D-Dog, a little disappointing this past week. We had to, at least on Thursday, reduced a little bit of this one. But it kind of came back. So this could be something. We'll see if this was just a shakeout, got all the weak hands out, got partially our weak hand out. See if it wants, and then it kind of got bought back up. We'll see if this wants to continue higher. CLS is on watch. This is probably one of the lower ones that we're thinking about. Just very choppy in here. But the market sold off. This thing looked like it was ready to go before the market decided to kind of pull back. And we'll see. It's kind of, if you think about this area, it's kind of consolidating just like the S&P 500 is consolidating. So we'll see if this thing, if the market can break out to new highs this week. We'll see if this thing wants to kind of rip, because it'd be nice if we can get some, if things are all good and we get this kind of move out of here. It's a pretty good move. It's like a 20% return in like 3 days. So we'll watch that. Dock in, a little disappointing also. It's just kind of, it looks way better when you look at it like this. It doesn't look very good. It's just, I know it's going higher, but it's just so volatile, right? So we're keeping a strong eye on this to kind of see, I guess, if we were to say an area of, if we got concerned, we'd probably draw a line right here. So, okay, that's what I got for you this week. Take care. Have a wonderful weekend.